Hello, everyone, and welcome to Stock Options for You. Thank you for joining us today. Please feel free to subscribe and like us on our YouTube page, which is also called Stock Options for You, and visit our website, stockoptionsforyou.com. Today, we're going to be going over a hopefully quick video in regards to drawing supply and demand zones. And the purpose of that is so that you can make day trades. So I will be using the TD Ameritrade Think platform. You can use this theory with other platforms as well, but I just like to use Thinkorswims because I feel like it's the easiest. So we'll go ahead and hop right into it here. So as you can see, I do have the Thinkorswim platform up. And the stock that we're going to be looking at today is SPY, S-P-Y, and that basically tracks the S&P 500. I generally trade in this particular stock because it is somewhat volatile, but there's a lot of movement in and out all day, so it's very easy to hop in and out within seconds or minutes and not have to worry about your trade being executed. So what we're going to be looking at today is drawing these supply and demand zones so you know when to enter an option trade, either buying a call, which means that you're hoping the stock goes up, or buying a put. You're hoping that the stock goes down. Generally, the options that we trade have expiration dates either the same day or one day out. And as far as the strike price, we are always, more often than not, doing in the money strike prices. So for example, if you're ready to enter a trade at a certain time, and let's say the price is 380, we're going to buy the 380 strike price that's expiring either today or tomorrow. And if we think it's going to go up, we're going to buy a call at 380. If we think it's going to go down, we're going to buy a put at 380. So we'll go ahead and get into the charting here. Obviously, you're not going to have all this information ahead of time when you log into your computer and are trying to make a trade. You're only going to have a small portion of the details. Or you're going to be sitting there kind of watching throughout the day and then making your decision later on in the day. I generally don't like to make a trade within the first hour and a half or so of the day. So I've kind of drawn this line here for informational purposes. I am in Central Time, so the market opens at 8:30, it closes at 3. In this case, I won't enter any trade until usually after 10 o'clock. So once I log into my computer, I will see what's gone on for that first hour and a half. Generally, the first hour and a half is pretty volatile, but it does kind of set a precedent for potentially where the market's going to trade within for SPY throughout the day. Now, obviously, there's different news or things like that may cause the trajectory to go a little haywire, but for the most part, at least at a couple points throughout the day, these ranges are going to help you to make that one trade. Again, we're not looking to make 10 trades a day. We're literally looking to make one, maybe two trades in one day, and that's it. We're not looking to make 100, 200% gains. We're not even looking for 50%. We're realistically looking to make 5 to 10% per trade and kind of do that on a consistent basis. To kind of give an example, let's say you're doing a $10,000 day trade and it goes up 5, 10%. I mean, that's $500 to $1,000, within minutes. Again, you can lose that quickly as well. But if you're following the theory and kind of taking the emotions out of it, cutting your losses when you see things not going your way, over time, those $1,000 gains are going to add up, and you're going to be in the green, making profits. So that's one of the hardest things, though, is taking the emotion out of it, or saying, oh, I shoulda, woulda, coulda, I could have made 200% on this. Well, yeah, at times you may get lucky and get those huge gains, but those are far and few. So just kind of concentrating on those small winners will make you a big winner in the long run. So getting back to the chart here, again, I've logged in at 10 o'clock, let's say, and so all I see is this information to the left. What we're looking for is to find the point where the red and the green candlesticks meet. And we're looking for kind of the flat point, not necessarily these thin skinny lines. It's more so the flat point. The chart that I'm using to make my lines is a 5-minute chart, and I'm using this drawing tool to draw these lines. So these long horizontal lines here, I'm using this one, this price level, and for this particular line, you don't necessarily need to draw it, but for visual purposes, I'm using this time level one. So we're on the 5-minute chart. The 5-minute chart is where you're going to draw your supply and demand zones. And the 1-minute chart is what you're actually going to use when you're actually trying to make a physical trade. So I've kind of already drawn these lines, but once you log in, you'll see the activity. These two, for the most part, meet, so we'll draw that line there. These two meet up top here, and then there's some minor ones that kind of meet there and there, maybe even down here, which is pretty close to this lower one, but we can draw it anyways. This one and this one are called kind of the major and the minor supply zone and demand zones. And these ones in the middle here are kind of the intermediate ones that also do come into play. So let's say I've logged in, I draw all this information here, I'm good to go. Now I can flip back to the 1-minute chart and go ahead and scroll back to the day that we're working on here. So once we flip over to the 1-minute chart, again, that is where we're going to be using the entry and exit points is for this 1-minute chart. So this is kind of how it looks here. Maybe zoom in a little bit more. All right. So now it's past 10 o'clock. What we're looking for, and obviously you can see, because we have the data ahead of time, but you can see there's all these fluctuations going on throughout the day, and they're, for the most part, within some of these lines that we have. You notice throughout the whole day, it's fluctuating anywhere from here, actually a little bit lower, all the way up to, up to here. But again, we're just looking for one good trade. And as you can see, there's probably plenty of those throughout the day, later on in the day. But kind of getting back to what we're looking for. So we are looking for either 3 green candlesticks going up, excuse me, or 3 red candlesticks going down. The caveat is they generally do need to be within these supply and demand zone lines that we've drawn. If you want to buy a call option, then we're looking for these green candlesticks, and that means that you're hoping the stock goes up. If you want to buy a put option, we're looking for 3 red candlesticks consecutively, and we're hoping that the stock goes down. Again, we are only going to be in this trade for, gosh, maybe only a minute or two. It could go longer, depending on kind of your um, goals, if you will. But if you're looking for 5-10%, I mean, that can potentially be achieved within, a couple minutes. So I'm logged in here. I'm still kind of seeing what's happening. As you can see, there's 3 greens here. We've got some 3 reds. It's just kind of fluctuating in this point. Potentially, if I was paying attention and right on it, I would see that, hey, we have a point here where these have kind of crossed that supply demand zone there, but they have met. So as you can see, there's the red and the green. They've met, and now it's starting to pop up. So we have 1, 2, and 3. So right around that third one, or right after it, we would make an entry. Again, you kind of have to be quick about it and be ready to do it. Enter your trade fast, but we could potentially hop in here, the top of this, the bottom of this, and literally, if we hold on, just from here to here, could net you that 5%. So you could literally hop in here in a minute, you're out. This is a 1-minute chart, so this is 1 minute, 2 minutes, 3 minutes, 4 and 5. So you're hopping in here, you're holding on for a minute, and then boom, you're getting out. The second that you see this red right here, you're out. Or the second that you hit that 5%, you're just out. You don't want to wait, right? Because this is what you could run into. Let's say you hold on, and now you see 1 red. Now we see 2 reds and 3 reds. Potentially, you don't know if it's going to continue. In this theory, it could keep going down because it's going to start approaching these bottom lines. In this particular instance, it didn't, but this is dangerous right here. So again, it's not a foolproof system, but if you were to do this, you hop in, you hop out. Here, potentially, yes, we see 3 candlesticks of red going down. So you could potentially buy a put right after this one. You'll see though, green, it's going up. You don't panic here. So we have 2 greens, but then 1 red. We don't have 3 consecutive ones, right? So this is where it gets tricky. This is where some of the emotion and the technical analysis kind of takes fruition. Yes, you could have gotten here. You may be panicking here. Oh my gosh, it's going up. We have 1 red though. Oh no, it's still going up. But then you'll notice here, it kind of hits this zone and taps out, right? So now we have a big red, another one, a green. Now, so it's kind of deciding what it wants to do. But now you see 1, 2, 3, another 3. So hypothetically, if you didn't get in here on the put, if you're just sitting here watching and seeing how it's bouncing around, on this one now, you could get in, and you'll see, sure enough, there's a little green, but then boom, right here, big drop. And then it continues to drop. It actually breaks through this line. All you're looking for, though, is it to kind of hit this line, and then you would want to get out, right? In this case, if you decided to hang on, you're getting a little lucky, and it drops even more. But literally, if you're hopping in here, and then it drops here, and it approaches this line or breaks through, essentially you're going to make a pretty good, maybe 10-15% profit there, and you can hop out. In this case, it broke through, and now you can see it's starting to bounce back up. This is where, as the day goes on as well, you may have some additional lines that you can draw. So these are only the lines based off of this first period of information, the first hour and a half. But there are going to be different fluctuations through the day that maybe break through. So for example, now this is another supply demand zone here. So we can draw that and now you can see, okay, green, 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 3 greens. Well, what could happen is it could break through this, right? Or now it's set new zones. So maybe it's going to bounce off of this and hop back down, and now it's going to fluctuate here. Again, not a foolproof system, but seeing that for the first hour and a half, it's kind of fluctuated in these line zones, there is a decent chance that it breaks through. Okay, so potentially you could get in there. If not, if you're scared it's going to kind of bounce down, you could wait. But now, look again. We have another 1, 2, 3, but now it's kind of hitting this zone here. You may have missed an opportunity. You may have not. You could kind of wait and see. Again, this is where some of the emotion and not worrying that, oh no, I missed it, I'm not going to get another chance, happens. So you're just kind of waiting because you want to see what happens, right? Is it going to establish a new zone here, or is it going to hop back into these original lines that we've drawn? So as you can see, red, 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 potentially it could break through. You don't know. This is a tricky one, but then it bounces back. 1, 2, red, red, red. It's just kind of figuring out what it wants to do. But as you can see, it's kind of hovering this kind of main zone that we drew at the very beginning. This little push down here was potentially just, kind of everyone just kind of selling out real quick, taking some profits, or, maybe there was some sort of new, who knows, right? But we're kind of going off of these lines here. So we're waiting, we're being patient. We see it's kind of bouncing there. Now we see, okay, 1, 2, 3. Okay, this may be something worth looking at, right? Because it's bounced off of this bottom line and maybe approaching this. So maybe it's going to start fluctuating here. It could break through to this next zone. So if we're looking at this, and another good thing to look at is sometimes when you see these long jumps or long drops, that sometimes is a sign, especially if you see 2 or 3 of them in a row, that's a sign that the trend is going up. Some of these little ones aren't really giving you inclination of what it's going to do, but sometimes when you see some of these bigger jumps, it could mean that the trend is going that way. But regardless, we see 1, 2, 3. It's kind of bounced off of these original lines. So we could potentially get in here. And then sure enough, we get in there. It's 379.80 at that point, and we get a big jump here, but it's kind of touching this zone. So we kind of want to be a little weary of that because we don't know if it's going to break through. It may start bouncing back down. Obviously, we can see what's happening, and that's what occurred. But again, you're only looking for 5–10%. If you're hopping in here and it goes to here and you just hop right out, again, this is only within a 1 to 2 minute span, you have your 5–10%. Sure enough, we get a big drop here, a little back bump back up, but then here we go, 1, 2, 3. So now if you're doing a put, right, this would be a good time to get into buying a put because it's bounced off of this zone here, and it's starting to approach these lower zones. So in that case, if we're buying a put hoping it goes down, we would get in right here, right after that third one, and sure enough, it drops there. We could potentially get out, or we could hold on a little bit longer, because it's approaching these lower zones, and sure enough, boom, a couple more. Now you get out here for sure, because it's hit that original bottom zone. Kind of working the reverse again. Now, we kind of see these 2 red and green meet, and we have 1, 2, and 3. Sure enough, on that fourth one, we hop back in, we're buying a call, and it goes up, up, up. You probably want to get out here. Again, you're only looking for 5-10%. You're buying here, getting out right around here. But if you were to hold on, sure enough, it goes up here. And then again, you see these two meet, 1, 2, 3. You're buying a put. You're getting in right here. You're hopping out, right around here or here. You're not waiting till it keeps dropping here. Again, you can. It depends, if you want to go down that gambling aspect, right? You could, and you could make a good amount. Going from here all the way down to here, you could net, 25-30%. But again, looking for small gains, just trying to hop in and out. Sure enough, these guys meet here. 1, 2, 3. We're hopping in here. We're hopping out here. 1, 2, 3. Hopping in here, hopping out right here, and so forth. So you kind of get the idea. Again, another one right here, a small 1, 2, 3, but you could hop in here, and then hop right out. But this one's a little tricky because since this is approaching this original bottom zone here, the chances of it going up are likely going to happen, but it could also break through and go down to this earlier established lower zone. So this one's kind of a tough one. If you were to get in, you would have to get out right away. You may not get that 5%. You may get the 5%, it may be 3%. It really depends, but it's a tricky one because it's already approaching the bottom. So you may want to wait on that one to see what it does. And sure enough, it establishes this right here, and we have 1, 2, 3. You get in, you hop out right here because you've gotten your small gain. Don't do anything here. Again, you're not necessarily doing anything here because you don't know if it's going to break through and come down to this line. Even though you see the 3, it's you have this lower line. So anytime it's approaching that line, if it's on the third one, you want to be a little weary. You only want to kind of choose the ones that are, for example, like this, where it's kind of hit this top zone. It's kind of fluctuating in the middle. So there is a good opportunity that it's going to kind of, drop to this line or this line. You don't want to do it necessarily when it's, at the line and dropping, or, potentially at the line and rising. At the higher line and rising, I should say. So for example, this one, if you were buying a call, this one, 1, 2, 3, yeah, you could do that one, and you're going to make your quick profit, but you have to be a little weary because it's approaching this line. So you want to try to pick the ones that are, for example, so some of these earlier ones where it's bouncing off of the bottom or bouncing off of the top. This one right here, bouncing off the bottom zone, is a good one, and so forth. So this hopefully gives everyone a good idea of how to draw the supply and demand zones. Again, you're drawing the supply and demand zones using the 5-minute chart, but you're actually looking to enter your trade using the 1-minute chart. So draw your lines on the 5-minute chart, make your trade based off of the movement on the 1-minute chart. So hopefully that all made sense. If you do have any questions, feel free to visit our webpage, stockoptionsforyou.com. You can fill out a contact us form, ask any questions you'd like. Feel free, again, we would appreciate it if you visit our YouTube page and subscribe and like us. We're just getting started with these videos. We've been trading, oh gosh, myself for over 20 years now. So definitely have seen the ups and downs. I've used different strategies. This has actually been one of the best strategies that I've actually ever seen in my entire lifetime, when it comes to day trading and doing these type of techniques. We will be coming out with some additional videos. There's some different strategies such as swing trades. Those are not day trades. They tend to last a little bit longer. You may be in the trade for a few days, you may be in it for weeks. It really just depends, and that's based off of different charting, which we'll show in that video. But hopefully this was a good start to, if you're interested in day trading and trying to make that 5-10% consistently. This strategy does work, and hopefully it will help you to make some profits down the road. So thank you all for joining us, and we will talk next time. Thank you.